in a sense, be doing this kind of business under the table.
That is not true. Terrible, terrible advice. Hi, I'm Nate. I've been a CPA for 12 years. I'm also the founder of Cookie Finance. We are an accounting platform for content creators. And today I'm going to be reacting to TikTok videos on taxes.
It's all fun and games making money on TikTok until tax season comes. Why do I owe almost $4,000 in taxes?
Well, you owe $4,000 in taxes because you made money on TikTok. My guess, if you owe $4,000 in taxes, you probably made anywhere from like $15,000 to $20,000 on TikTok, which is awesome. Congratulations. Taxes do suck, and we are trying to minimize them as much as possible. But one silver lining, I guess, if you want to like be a glass half full type of person, is the more you pay in taxes, that means the more money you're making. Now let's try to minimize those taxes, but that's why you owe $4,000, because you probably made $16,000 to $20,000 from TikTok, which good for you. That's awesome.
And the kicker is TikTok waited until today after I've already filed my taxes to send me my 1099 or whatever you call it.
Yeah, TikTok was a little bit late this year. Companies are supposed to send out 1099s by January 31st. TikTok, it was like, Valentine's Day that they sent out their 1099s, so they're a little bit late. But here's why it's really important to keep track of your income all throughout the year, because regardless of that 1099, you should have a record of how much they paid you. So it doesn't matter if they sent you the 1099 3 months late. You should have a record and you should have report exactly what they paid you on your tax return. Now, the big thing to look out for is make sure that the 1099 that they sent you, what they said they paid you, matches your records. If they don't match, get in contact with that company right away to make sure that it lines up with exactly how much they paid you. So it doesn't really matter if TikTok never sent a 1099, sent it late, because no matter what, you had to report that income. If you had correct records, it should line up almost perfectly. Good for her for filing so early. If TikTok sent their 1099s on like February 14th and she already filed her tax return, like, good for her. That's amazing.
And supposedly, there's a date on there that I signed it. When did I sign that? Hello? It said I signed it in like June of 2024. Hello? I don't remember signing nothing in June of 2024. Insane.
What she probably signed in June 2024 was the W-9. So anytime you sign up to work with a brand or a platform, they're going to have you fill out a W-9 where you put your name and social security number, or if you're an LLC, you put your LLC name and EIN. That way you don't have to put your name and social security anymore. She probably signed the W-9 last year in 2024. That's probably what they're referencing, not that she actually signed the 1099. You don't ever sign a 1099, so that's probably what they were referring to.
And the fact that it sent it after January 31st, the deadline, is that not illegal? Can I not sue TikTok now? That's crazy.
It's not illegal. Once again, technically they were supposed to do it, but you can file late 1099s. Just like if you don't file your tax return on April 15th, the IRS is going to sue you for not filing your tax return on April 15th. They'll just hit you with some fines and penalties. But no, unfortunately, you can't sue TikTok for them being so late to send out the 1099s.
I wonder how these big TikTokers, do they keep money set aside all year?
Yes, they do set aside, maybe not big TikTokers. I would say people who are savvy with their taxes, and most creators are very right-brained and aren't thinking about taxes. But we really recommend anytime you get paid from TikTok or any other type of brand or platform, you immediately take 25% of that, you set it aside in a separate savings account for taxes. So you're wondering why you don't have $4,000 to pay those taxes is because unfortunately you probably weren't setting aside that money throughout the year. Now, if you're a first-time creator, totally makes sense. No judgment here, but moving forward, if you're a creator, take 25% of everything you make. Pretend like it's not yours, because it's not. It's the IRS's, and they want their money. They're going to come after that money. Take that 25%, put it into a savings account. Don't touch it. That is for taxes at the end of the year. And then you don't need to ask people for $4,000 to pay your taxes.
There's no way. If I have to pay that much, I cannot imagine how much these big TikTokers have to pay a year in taxes.
Yeah, they are paying. The more money you make, unfortunately, the more you have to pay in taxes. But also, there's some really good strategies that you can start to take. There's some deductions you can make sure that you're taking. The more money you make, you can do tax strategies like S Corp to kind of lower that tax bill. But unfortunately, the more money you make, the more you have to pay in taxes. So I can't really rate this. I feel bad for her. Definitely set money aside for your taxes. Make sure you're keeping track of your income and expenses, and then none of this will be a surprise to you when you actually do your taxes at the end of the year.
Who else is confused about filing taxes for money made on TikTok? Because I am. This video is partially educational. I want to share something I found out, but I also want more information because I'm confused.
Well, we're here to not make you confused, so hopefully we can answer some questions for you.
So I make money through the creator fund or whatever it's called these days, just my own videos getting views and I get paid for that. And then I also do like brand deals, like I post videos of free samples I get and then I get a commission for sales made on those from TikTok Shop. My 1099 that I got only had about half of the amount that I received from TikTok reported on it. So I was like, where's the other half? Do I need a separate form for it or what? So I Googled it and it was so hard to find, but one person answered a question on like Reddit or something and they said, on your 1099, that's only like creator fund money. And anything made through brand deals, you're like in charge of keeping track of yourself and reporting yourself.
So that's half correct. She is correct that anything that goes through TikTok, TikTok Shop, the Creator Fund, Google AdSense, that type of stuff, you will get a 1099 directly from the platform for money made directly on that platform. Now, if you did a brand deal with a separate company, they should be sending you a 1099 for the money that you made from that brand deal. Even if you posted the video on TikTok, but the brand deal was with Home Depot, for instance, Home Depot will send you a separate 1099. Now, what's a little bit confusing about this, it seems like almost like she was talking about TikTok Shop. They should have given her reported that TikTok Shop income to her on her 1099. So I'm not quite sure why they didn't do that.
So I want to know, is that true? Because that's weird if so. And also, unless it's a huge amount, does it really matter?
Yes, it matters how much the amount is. So this goes back to why we're really going to keep hammering home the point of you need to keep track of your income and expenses on a monthly basis. Because whether you get a 1099 or not, you have to report that income. But once you do get those 1099s, you have to compare that to what they show to make sure that things line up. Some brands, some companies, they just don't send out 1099s. They are supposed to, but they won't. And so regardless, you have to report that income on it. You can't just be like, I'm just not going to report that, put that under the table. That's illegal. You need to report that income. So whether you get 1099 or not, make sure you're reporting that income. Some brands just don't do it. And sometimes brands mess up. If that TikTok Shop income should have been recorded, so I'm not sure why that didn't show up on yours. But even if they didn't report it, it's not going to make sense to go to them and be like, hey, report this on my 1099. The IRS just looks at your tax return and compares it to 1099s and makes sure that things line up more or less.
Do you need an LLC as an influencer or a content creator? Here's what you need to know. I made my first LLC, A Life in the Fashion Lane, when I was about 16 because I was making about $1,000 a month on my blog. Now, my uncle, who is an accountant, advised me to do that. Now I have a full LLC for my business, Be Fearless, and that's because it pays my full-time bills and I'm no longer 16. If you're making under $1,000 a month, I genuinely suggest not having an LLC. I don't think you need to be writing these things off on your taxes, and you really can, in a sense, be doing this kind of business under the table as if someone's paying you as a friend.
Okay, so let me break this down because there's two parts. She was on the right track and then she kind of went off the rails a little bit. I agree with her. If you're making less than $1,000 a month, you probably don't need an LLC. But if you are on the path, you're trying to make content creation a full-time job or take it more seriously, it doesn't hurt to get an LLC. It usually costs between $150, $250 a year to set up an LLC. So if you're making less than $1,000, maybe it doesn't make sense. But once you're trying to make this more serious, it really makes sense to get an LLC. It protects you. It's protecting your identity, especially when you get that EIN, personal asset protection, so on. I strongly recommend you get an LLC once you're above that 1,000. So that part was correct. Now, where she went off the rail was when she said, if you're below that, you can just like do things under the table as if like, you can just not report that in taxes. No, you still need to report that income on your taxes. You can't just like do it under the table, not report to the IRS. That is not true. Terrible, terrible, terrible advice. Also, she mentioned something about deductions. You don't get any more deductions by being an LLC as compared to sole proprietor. You get the same deductions, whether you're an LLC, sole proprietor, an S Corp, you get the same exact deduction. So it's not tax advantageous to be an LLC. It just makes you more legitimate. It's going to help you protect your identity as well. So she was going strong. I was really happy that she was saying, and then she kind of went off the rails. So I'd give this one probably like a 5 out of 10.
I just found out that if you are accepting gifted collaborations, you have to pay taxes on the product that got sent to you.
As someone in the influencing space for over 2 years, I've never got taxed a single dollar on gifted products that I received, and this is why. A lot of content creators don't understand the difference between a gifted collaboration versus PR.
Yep, that's exactly right. I know exactly where she's going. We'll keep watching, but she's exactly right. Gifted products, if a company just sends you a package and they say, hey, here is a bunch of, she was using makeup, like here's a bunch of makeup. We hope you like this, wink, wink. We hope you, give us a little shout out. You don't have to report that income. That's totally fine. That's not taxable. What you do need to pay income or taxes on and report as income is when there's a barter transaction, what the IRS calls a barter transaction. A brand says, hey, we are going to send you this whole haul of, product, but only if you agreed to do A, B, and C for us. Then that is considered a barter transaction. You're exchanging goods and services, and you are supposed to report the fair value of those items as income on your tax return. Let's hope that's where she goes with this.
Essentially, if you're agreeing to a gifted collaboration with a brand, you are trading free products in exchange for your work/services. And because you are signing a contract in exchange for those free products, brands are more likely to send you a tax form at the end of the year in which you have to pay taxes for the free products that you've gotten.
Now, she says you're more likely. We work with a lot of creators. We work with hundreds of creators, and the number of our creators have gotten a 1099 from a branded, like free branded product is basically zero. I think the only ones we've seen is like American Airlines. Now you are more likely, I guess, technically, but most brands, I would say 98% of all brands are not going to send you a 1099 reporting that as income to you and to the IRS. Okay, it's kind of up to you to report that. Okay, and don't ask them for 1099. They'll be like, whoa, like we're not going to do that. Like that's up to you to figure out on your own taxes. Don't ask them the fair value of the product. Once again, they're gonna be like, hey, like we wipe our hands clean. Go talk to your accountant about that. That's where this type of stuff is really murky. It's really up to you to figure out what the fair value is, to report that on the taxes. Most likely no one else is going to report it. So it's kind of up to you to do that.
Versus PR, which is like 98% of the free products that I get, brands will gift you a product and they don't expect you to post. So they're not reporting any of those gifts on your taxes.
Yep. So she's exactly right. If a brand just, once again, sends you something, a PR, you don't report that as income. If it's an exchange of goods and services, you are supposed to report the fair value of that free gift as income. So if you got 3 nights stay at a hotel, you need to figure out what it would cost to stay 3 nights at that hotel, whatever the fair value of that is, and report that as income on your tax return. Once again, though, most likely 99% of brands are never going to report that in 1099, submit anything to the tax or to the IRS. They're not going to send you anything for tax purposes. So it really does fall on you to report that yourself.
I was getting so nervous watching everyone else doing their taxes, and I kind of had this panic moment of oh my gosh, I have to do my taxes and I'm so stressed. This is the first year I've made insane money online and I have to track my expenses. And this was a moment, okay? And then I remembered that I don't have to worry about barely any of that because I have Cookie Finance on my team.
All right. I love our creators. But here's a good question that we get from people of DIY versus hire a professional to do my bookkeeping, to do my taxes. Can I just do it myself? And the answer is, you can be $1 million company and still be doing it yourself. But really, where do you want to be spending your time? If you're making insane amount of money, and insane amount of money is different for every person. It could be $60,000, $70,000, $80,000 a year, $100,000 a year. And that is a lot of money. The question is, do you really want to spend your time and effort like bookkeeping, categorizing all your income expenses, making sure you're calculating your estimated taxes, doing your own tax return? Or is your time better spent making content? Do you really want that anxiety always hanging over your head of like, am I doing this right? Should I take this deduction? Should I not take this deduction? Or would you rather have like peace of mind of like a professional doing it for you? So up until you're making $60,000 a year, we really encourage you to do DIY. I think it's really important that you learn to do it yourself. You get those good habits down. Once you're past that $60,000, $70,000 a year, it's time to turn over to someone else. Like you've learned how to do it. You've gained the good habits, and then it's time for you to like get that peace of mind, to take it off your plate and let someone else take care of it. So then you can focus on creating content, building your business, and not doing, bookkeeping and taxes.
Tax, bookkeeping, and accounting services exclusively for content creators and influencers. That's Cookie Finance.